Welcome, everybody. Just give it a little bit more time, let more folks join.
Is this the... Okay, yeah, it's the meeting.
Vous voulez un sandwich de pour?
We can probably get started. So we've got a YouTube stream going. Sorry, I got a YouTube stream going, and I also have the Zoom session going. If you want to actively talk, the Zoom session is better. If you have questions and just want to chat, use the YouTube. That way I can look at the YouTube with the questions there and answer people's live questions here in Zoom. All right, so feel free, those of you on YouTube, feel free to go ahead and type out your questions. And those of you here in Zoom, feel free to start asking, raise your hands and, just ask whatever questions that you guys have. All right, let's see. All right, looks like Giovanni has a question.
Hi, what's up? What's up? Oh man, what a crazy day today, huh?
I don't really pay attention to it, to be honest with you.
Yeah, I have oh well, it's already 8 o'clock. I got Tesla shares. I'm negative like 4,800. I was just about to sell it. What do you think I should do with that, with the Tesla shares?
Hold it. Why would you sell shares at a loss? You got unlimited amount of time for those to come back to life.
You think Tesla has a possibility? Correct. It's just I guess I'm actually new to the market. Actually, I'm now learning off from you guys for a while.
The first question I have is, how much do you have as far as that position? What percent of your account is in that Tesla position?
I have 60K in my account and I put 20 of it in Tesla.
So that's probably too much. But again, it's shares, so it's not the end of the world. I would probably just continue to hold that. I mean, I see Tesla going higher in the future, so I wouldn't worry about it at all.
Okay. I was thinking about it. I think I don't remember who I think somebody who was in the meeting yesterday. Was it FaZe? I think FaZe. I was trying to remember what FaZe had told me. He's like, sometimes you have to just take your losses and get back in another time, or I don't know. I was just so much going through my head with the stocks. But
Well,
I guess
number one thing you need to do is don't be emotional about it, right? Don't let it affect you. Don't let it keep you up at night. Because if it keeps you up at night, then you're in it too much. You're in too deep.
Yeah. Okay. Okay. Yeah, you're right.
Never ever cut losses with shares, right? You don't. There's like, FaZe, he has his reasons for why he would cut for a loss, but I'll never take a loss, ever. So, it just means that you got $20,000 sitting somewhere bag holding until it comes back to life, right? That's the only negative part here is you got 20K out of commission until it comes back. So, you should be doing 5% of your account value, not 33% on one trade.
Yeah.
So
Just that Tesla was doing
60,000 is 5% of 60,000 is $3,000. That's how much you should be doing per trade.
Yeah. Oh man. Yeah, I guess I'm just gonna hold it. I was just gonna because I guess within the past couple months, 2 months or so, I had made probably about 6K. I was just thinking about getting out of it, taking it for a loss and getting out of the stock market just for a little bit and getting to understand it and learn with you guys more. But you're right. I'm
Yeah,
just gonna
I
keep it
wouldn't
there.
take losses on that. No way.
Okay. You have a feeling that Tesla
I'm
should be
telling you,
going
long
back up.
term,
I'm just
it's
trying to
going over $1,000. So I wouldn't worry about it.
okay. I was just trying to wonder what's really going on with the market. Is it a market crash? This is the first couple. I only been trading for like a couple months, so that's why I'm really trying to understand what's going on with the market. I don't know if you really.
No, nobody here understands what's going on with the market. And for 12 years, I've been doing this. I still don't understand the market. So, you just got to understand what you're looking at and understand when to get in and out of something. But trying to understand the market as a whole is an endless and futile game that you don't want to play because you're always going to
Yeah.
be, it's pointless to try to do that.
Okay. Yeah, that makes sense. Okay. I guess I'm gonna let somebody else answer questions. I'm just gonna have to grow some balls and just hold on to it.
That's what I would do. Okay. Anybody else have a question they want to ask? Dennis, go for it.
Hey, Austin, how's it going?
Pretty good.
Quick question. With the cash secure put, when should we be rolling or thinking about rolling it to the following month if you're caught on the wrong side?
Um, so are you in something right now? Like, do you have a
Yeah.
specific
And,
example?
yeah, I'm in NNDM at the 12 and a half and just want to see. I don't want to take the shares, so I'm thinking we'll just roll on it and want to know, why we do it now, why we should we do it closer to expiration. Are we looking at the spreads to see what spreads we like? And if the spreads significant or sufficient enough for you, you could just roll it then. Is that kind of how we look at it?
Okay, so first question I need to ask is you've got March 19th, what strike? 12 and a half.
12 and a half.
And you want to roll the contract out. Let's see, the price is at 7. Oof.
I think it's 5.
Okay, so just take a quick look. So what I would do is wait for this stock to pump back up maybe to $9 or $10. Let's see. Let me see if that's even possible. I'm not sure when this downtrend is going to end, number one. Second thing is it's on the second standard deviation channel, which is a area of support. Third thing we've got is current level is, I'd say really strong support is at $6.
Mm-hmm.
How much time? How many days left is that on the
Okay.
expiration?
2 weeks.
So I'm in a position right now as well where it's completely against me. I'm just going to use mine as an example, and you can determine what rollover credits are good for you and all that jive. But for me, so I'm in PLTR. I get a 30 strike. You see, I'm way in the money, super way in the money. Right here's where I'm at. You can see my position there. Um, the good thing for this stock and for me is this stock likes to pump pretty hard sometimes. Like it'll go to $28, right? Or 27 or high 26s. When it does that, I'll be looking to roll at minimum the same strike, if not a strike lower. Right. So I'll be looking to maybe grab this 29.5 or the 29. If I can get credit for it, that's even better. Do not pay a debit. If it's break even, that's okay. If you get credit, even better. So you wait for the stock to pump in the direction, and then you roll when it does the pump, right? So that's my plan. What I'm going to do based off of being in the money pretty deeply, right? So when this thing goes up to say 27, 28 bucks, when I roll this 30, it'll probably be for decent credit, 50 to 75 bucks, because I'm going to try and roll as early expiration as possible. Right, that's the goal here when I roll. I want to go to the nearest expiration as possible, get credit for something that I rolled, and hopefully be able to roll my strike towards the stock price. Now, having all three of those happen at the same time, I may not be able to get that. But at a minimum, don't pay, right? So never ever pay to roll a position. If anything, go further out in time, something like that.
Essentially, Hostel, I'm taking a loss on the current strike price, and then I'm taking in more credit on the following month. So then I'll take in more credit than my loss.
Yes, because there's more
Okay.
time.
So it gives you more time to
contract.
catch up. So basically, I'm catching up after that.
Not necessarily. So, I mean, so what you're basically doing is selling more time than the
Yeah.
previous contract, and because you're doing that, that adds value to it, right?
Right.
So you're able to extend the time frame. If you're going to stick with the same strike, you're able to extend the time frame, and hopefully you got credit for that position. That way, when theta decays, it goes even further in your favor, right? So if I took a
Right.
position of $200 premium from a 30 strike, and then I rolled it, 5 to 10 days prior to expiration, and I got $100 to roll it to the following week, now I'm at 300 bucks. So when the stock moves in my favor 20%, it's not going to be um, what's 20% of 200? I'm sorry, hold on. 200.
40.
Okay, yeah. So you're not. It's not going to move 40% anymore. Now it's going to be 60% because you got $300 in credit, right?
Yeah.
So that you want that. You want it. It's really, really ideal to get credit because when the stock moves, the percent is what's really going to show you returns, right? So if you roll the strike down, it kind of does the same thing because you basically take off the top. So if I roll from 30 to 29, I'm taking $1 off the top, right? So if I took in a $200 premium for a $30 strike and then I rolled it the next month down to the 29, I just essentially removed $100. So it's going to basically, if I got the same premium, I'm going to be able to get to that max profit faster because I removed an amount off the top. It's basically the same thing as receiving credit. If that makes sense.
Yeah. So that makes sense. I just have one more question, if you don't mind.
Sure.
So regarding PLTR, I kind of played the volatility today, and I own shares. So I was doing cover calls and I was doing cash secure puts based on volatility when we hit the high and the low. Mm-hmm. So I was in both trades at once. And I'm okay taking on the shares if I were to get caught, which I don't think I would because it decreased my average. But if I'm in a CSP and I'm in a cover call, that's okay, right? Like as long as I'm okay taking the shares on if I get called on that or if they get put on me.
Yeah, I mean, if the CSP goes in the money, yeah, sure, it's totally fine to take the shares. I mean, if you don't mind owning the shares, right? That's the only question you got to ask yourself. So it's fine with that. And if it goes against you and you're in a covered call, that means your covered call is going up.
Exactly. Like it actually paid pretty well today doing that. So good. I'm just trying to decrease my average on PLTR and it's working out.
Nice.
Yeah. Thanks.
You're welcome. All right. Let's see here. I'm gonna go through some of the questions on the chat, on the Zoom chat first, and then I will jump to the YouTube chat, and then we'll get some more live voice questions from the next folks that have them. So let's see. How can I get past the day trading rule if I don't have 25K in my portfolio? Bryan, you can do that by getting a Webull cash account or a TD Ameritrade cash account or a Schwab cash account, but you need a cash account. Are you in here, Bryan? Bryan with a Y? Can you talk? Anyhow, um, yeah, you need a cash account in one of those places or one of those brokers to be able to day trade without 25K. All right, let's see. Just kind of reading through here. Let's see. Jake, with the market being so trendy, what shares would I get into to short or short-term swing? I'd probably go for like some Neo shares, PLTR shares, Laser, Lee, LI, Lee. Um, there's, there's a handful of other ones out there. I mean, there's a lot of stuff that's down right now. Just go out there and look at support and resistance and see what's at, 1 year support and trade that. So another question, just started Discord. This is from Susan. Use Robinhood, have around 8 to 10 shares. How many shares do you recommend holding? Started small. 5% of your total account value. No more than that in one position, or at least try not to be. Let's see. Okay. All right. Let's see. So at what point do we know in the market that we have to start grabbing some puts or hedges for VXX or something? You don't. You just have to do it to protect yourself from downside. So take note of that. All right. So moving over to YouTube. Jason Pinilla, I just started trading and I wanted to know when I should take profits and not get too greedy because most of the time I do that. I get too greedy and end up losing or not making much profit. So, Jason, whenever I always tell this to anybody, when you're trading something and you open up your phone or your broker or whatever, and the moment you go, whoa, you turn it on and you go, whoa, it's up. Look at that. Like a nice pump. That's when you get out, right? Don't wait for that pump to go away because a lot of times pumps are followed by retracements. So take it when you open your account and you're like, it makes your eyes big and you go, whoa, that's when it's time to take it, right? It could be a day, it could be a week, it could be a month. But whenever it does that, whenever you log on and you get that butterflies in your stomach from the money, the profits that you've got, it's time to take it. Don't wait. Never wait too late. Um, Jacob Darcy, with today's market tanking hard due to the news on inflation rates rising, what do you think we can expect or think to see tomorrow in this upcoming week? A downtrend, uptrend? I mean, I don't know, right? I don't expect anything out of the market. It does what it wants. I just try to play whatever direction it's going, right? So impossible to say which direction it goes because with here's the problem. When they say, like example, you're saying inflation, this and that, inflation rates, they're worried about it going up. Well, if they're worried about inflation going up, how come precious metals, silver and gold is going down? Makes no sense. Right? Those two, like precious metals, should be the number one safe haven to go into against inflation. So if inflation's a problem, why is gold and silver still going down? So I don't pay attention to really much of what really is being said and all this crap in the news. I just watch the market, and if it goes, if it's whatever direction is trending, play that direction. It's that simple, in my opinion. You'll get stuck in positions where something goes completely against you. Like we're talking about cash secured puts. I'm down, it's in the money, $5, $6, $7 on me. So I mean, worst case scenario, I own shares. And the beauty here is, the market goes against me. It's not a loss. It just requires additional time for me to get my gains out of it. Let's see. And I already answered the short-term share question. Let's see. All right. Who has additional questions? Please raise your hand.
I have a quick question. Nobody else does.
Go for it.
All right. So it's just a real quick. What is your preferred application or software or website that you use when you're trying to chart support and resistance levels?
Thinkorswim.
Okay. Is there? Do you have like a preference on what exactly to be looking for? Do you always like look at the EMAs, the moving averages, etc., or are you just strictly looking for something specific?
So when you talk about support and resistance, and then you start talking about EMAs and all that, those are two different things, right? I don't use EMAs. I don't use moving averages. I really only use support and resistance. I made some videos on it. If you go to my channel, Professor Hostile channel, down in the education section, you'll be able to see all the videos I made, and I made some regarding support and resistance, and also trend analysis, so you can kind of determine those. When you're able to determine those three things, you'll be a lot more successful trader.
Awesome. And in those educational videos that you have posted, are you using Thinkorswim, I'm assuming?
Yes.
All right, perfect. Thank you.
You're welcome. I think Jake had a question.
Yeah. So on a day base like today, I lost on both puts and calls because I didn't trust my gut enough to hold because I was down probably about 80% of the put. And at the highest of the day, it was at 455. I bought it for 130. I sold it for 50. What have you done, or what do you do in a sense to achieve the way where you trust yourself fully to the point where either you're all in or you're not? You know what I'm saying?
All in as in
Like, have you implemented a strategy where either you're very certain about the opinion and the option you're going into, that you just do it and you don't get out of it until you know that it's a pure loss, rather than just speculation of the market going up, you sell it for a loss, and then obviously the market tanks, you wish you had it still, like FOMO in a sense? But what have you done in a sense to prevent that? Because after you sell it, it goes back down or whatnot.
Well, I changed my style of trading. I don't trade those types of trades anymore. I do something completely different. I don't buy options. Something goes against me, you just lose, right? If you're gonna buy options, get leaps.
Leaps.
And buy leaps off of support. Don't buy leaps off of nothing else other than support, right? And that way, if it goes against you, at least you have plenty of time for it to come back. It's either that or you change the style of trading. Start doing shares again. I mean, if you've never done shares before, you should be doing that first, because if you can't make money buying and selling shares, you can't. There's no way you can make money doing options, right? So, and there's a lot of things that buying and selling shares teaches you that you need to learn, that's vital when doing options. Patience is one thing, right? With shares, you have to be patient. It's a guaranteed requirement to have patience when swinging shares, because you're not going to see profits in a day or two or a week. It's going to take, a month or so, 2, 3, 4 weeks. So you got to make sure that the stuff that you're getting into, number one, you have protection on the downside, whatever that protection is. And you need to honestly probably rethink how you're trading, because if, number one, if it's not working and you keep losing, don't continue to go down that path, because you're going to continuously lose, and it's a deadly cycle of loss. You don't want that.
Appreciate it.
You're welcome. Okay, let's see. All right, Go ahead, Giovanni.
Hello. Okay, there we go. I actually have a covered stock, and it expires tomorrow. Covered. Is that how you pronounce it? Covered stock. Covered. Well, yeah, I guess it says here covered stock, and expires tomorrow. Here on the bottom it says I'm negative 130%, negative $6. So what does that mean now exactly? I just have to just wait for it to expire. What do I do with that?
I don't know what a covered stock is, unfortunately. Seen some people doing it where basically my guess is that you got 100 shares and you sell covered stock option and it takes your
Yes.
shares and then now you've got an option. I don't know what that does. I've never traded that
Okay.
before, so I have no idea. Like I don't even know why anybody would do covered stock. That doesn't really make too much sense to me why. But maybe there's a strategy behind it that I don't know about.
Okay. All right. Thank you.
No problem. Okay, who else has questions?
Hey, what's up, Apostle?
Hey,
Um, do you look for patterns in charts, or do you just use support and resistance?
I mean, I don't necessarily look for patterns, but if it's there, right? I mean, I'm mindful about it. Really, I guess is what I'm trying to say. Like, I'm not specifically going on the chart to say, okay, what kind of pattern can I find? I go in there and do my support and resistance, and if I notice something, then I start to look into it.
Okay, that makes sense. And so I think you said when you chart support and resistance, you go off the candle bodies, right? So if you are charting some kind of pattern, do you stick to that and go from the bodies, or can you use the wicks if you're trying to get some other
Well,
patterns in there?
I try to use the bodies as best I can. Um, but sometimes, if the wick lines up, then it lines up, right? I mean, wicks aren't as strong as a body, but they still represent something, right? They're still accountable. So I wouldn't push them aside necessarily. Like, let's see, shit, let me see if I can find something. It might take me a while to find something, but if you got like a multiple wicks, so like let's say you got a support level, um, or no, better yet, you got a trend level. So you got an upward trend, and then you've got a bunch of bodies that are all kind of relatively right on that trend line, but then you've got 5 or 6 wicks that penetrate it, right? So that's a weakness area for that stock. Um, Now, whenever you draw something, if the bodies aren't all perfectly aligned with one another, the wicks account for something in that scenario, if that makes sense.
Yeah, it does. Okay, that makes sense. And that goes for all kind of patterns in charting, or just like even if you're going, well, I guess yeah, I guess it would account for all of them, right?
Yeah, I would say so.
Okay. Couple more questions if I can.
Sure.
So this has to do with volume. So lots of times, when they're talking about volume and more, I follow Mario a lot, I'm just do shares. Um, buyers are in control, sellers are in control. And, when the volume is higher, it's the sellers are in control. And when it's lower, buyers are in control. Is that the general scheme of it?
Not necessarily. I think
And so there's a
more.
second part to that question too. I just didn't know if I was on the right track, but go.
I would say that's more along the lines of volatility, implied volatility. If it's high IV, then sellers are probably more in control, and if it's low IV, then buyers are more in control. But as far as shares go, you don't. When you're looking for who's in control, you're looking when it hits a certain level, like a support or resistance area, right? When there's a transition area on the stock, that's when volume really makes a difference, because let's say it starts to head up towards the resistance point, and that an expectation of transition is, okay, it hits resistance, the volume goes from buyers to sellers, and then it starts to fall, right? But you could look at that also and say, well, if buying volume increases instead of decreases, you know that the buyers are in control and you're going to bust through that resistance point.
Okay, I think that makes sense.
Yeah,
Yeah,
it's more of a level, a threshold than anything.
yeah, because the volume is technically the amount of shares that are getting sold back and forth, right?
Right.
And so, I mean, even if it's high volume, it could be people selling shares,
Well, I mean,
and that's going to make the stock go down.
yeah, I mean, if the volume is leading that direction, right? Here, let me share my screen. I'll show you exactly what I'm talking about. Let's see. So if you look on my screen here, I mean, look at the volume. Like this PLTR, it had volume over 100 million twice,
Yeah,
right? So just because it's high in volume doesn't make it red, right?
yeah,
Really makes no difference. Only thing that matters is it coming to support or resistance, and then is the volume changing? Is it going from red to green or vice versa? Is
yeah,
is is it going from, like, let's say, like right here, it hit a resistance point and then lost volume, right? And you see red kind of pick up, and the
yeah,
green continues to shrink, and then the red overshadows. So that right there tells you sellers are in control here. But once you start seeing more green, green accelerating and red decelerating, that's a transition of sellers in control to buyers in control.
okay. And so on your volume, are they green bars because it's a green bar up top? It's a positive uptick in that bar, and red when it's red up top? Or can volume be red and green on its own aside from the chart?
You talking about right here, right?
Yeah, the color down there.
I'm not sure what your question was, but I'll try to answer it. The
So like
green,
the green bar of volume, is that always match the green bar in the chart as color? Like, if the
oh,
chart bar is green,
yes,
the volume bar green, chart
yes,
color
typically,
yellow. Okay,
typically that is the case.
yeah. And so up top in your corner, you said that implied volatility kind of really measures who's in control, and that's up in your top corner, right?
Yeah,
So that's a script, isn't it?
yes.
So I tried to, like, when I click the scripts in the channel in Discord, like, it doesn't open anything up.
It should open up a website for you to import it via the website into Thinkorswim.
So I put that link into Thinkorswim?
No, you click on the link comes up, and let's see.
Because I mean, I'm pretty tech savvy. I'm a web developer, but I couldn't figure it out for some reason.
Hold on, let me see.
I'm opening it up now too.
I'm gonna find it. Where is it?
Wait, is the scripts channel gone? No, that is.
So, current IV. All right, so this is what comes up when I click on the link. This
Yep.
right here comes up, right? So what I want to do is, you could do this too. Um, but you basically, actually, I think there's a. Let me see.
I didn't get this before, so that's new to me. So I can probably figure it out from that.
Okay.
Um,
Also up here, you see this open shared item?
yeah.
So you could just simply go to this link, copy this link,
Mm-hmm.
and then just go open shared item up here in setup, right? And it's going to ask you for that URL.
Yep.
Boom, there it is.
Nice. Okay.
And you can even check this box as open shared items after importing. That's what you want to do, because then if you don't open it, then it's just going to kind of go into the repository, and you're going to have to manually add it, I think.
Okay, that makes sense. Yeah, I guess that's all for now.
Okay,
Thanks, man.
you're welcome. All right, let's see.
Hey, Hassel, I have a question for you.
Okay.
When you are looking at just support and resistance, what would you say your success ratio is overall, like when just using those two indicators?
100%.
Oh yeah, nice.
I mean, just because something goes against me doesn't make me a loser, right? Even if I get in at the wrong time, based off of support, for example, I'm bullish on something, I like support level, I get into it, continues going down. Not the end of the world. I wouldn't
So
worry too
typically,
much, because
right,
you buy shares, right?
right.
Um, and when I do it off support and resistance, I haven't lost. I have not lost a single penny doing that. It just takes a little time. There's times where I've had to hold for 2 or 3 months, right? And I'm fine with that. I'm totally fine with holding. Like, I'm not gonna take a loss. I just don't believe in it, because like I said, somebody earlier was talking about cutting losses at a certain point. Like FaZe does that. Well, in my opinion, when I have $5 million that I'm trading, if I let's say I've got 25 to 50 positions, and one of my positions goes against me, instead of cutting for a loss, I mean, I've got so much cash that I don't need to cut for a loss. I can wait, right? It's not going to affect me to just wait. Have the patience for that stock, that bag that you're holding, to come back, because it will, right? So, um, the people that argue that we should be cutting losses so that we can get back into something else and regain that way going up, you're basically potentially putting yourself in the position to lose again, right? So if you accept one loss, what's to stop you from accepting more, with that mindset of, well, I can just cut this, get into something else, and make more money instead than what this is going to do for me, right?
Yeah,
So everybody has their way of trading. Everybody has their reasons why they would cut or wouldn't cut. And my reason for never cutting is because I always choose to be a winner, right? And if I trade with that mentality, to where I never cut for a loss, when I've got $5 million in the market, I will never lose. I will always win, always, which is what I do. I don't lose, right? I got positions against me. I still don't lose. I might end up owning shares, but that's still not a loss unless I accept it, unless I sell those shares for a loss, right? But I'm not going to do that, because I know the market swings, and it's cyclical. It goes up and down all the time. So, if something goes against me for a month or two, well, whatever, it happens. It's going to
right.
happen. That's just how the market is. You're never going to get it right every direction, every time, right? I mean, I'd say as far as direction, when I choose something, I'm 50-50 probably, right? Half the time it goes my favor when I get into it, half the time it doesn't. And when it doesn't, it goes down badly, right? And it's okay though, because I got to a position that I choose whether or not I lose, if that makes sense.
It does. And I have one more question for you. So, in terms of the time frames that you look for, right? So, what would you say is the typical turnaround time from the time it hits support to the time it goes back to what you expect it to? Like, when do you typically see that transition happen?
Well, that's a hard question to answer, because every stock is different. Every stock moves at a different pace. One way you can try to determine that is how long. So, like, let's say you're looking at support and resistance. How long did it take for that stock to go from that support level to the highest resistance point? Right? How many months? How many weeks? Whatever. Right? That's your first baseline. Second thing you got to ask yourself is how many times did it retrace in between that low point and that high point? Because that's going to happen, right? So, there's a few ways you can determine that information. But the best way to really understand that is to follow the stock religiously, look at it every single day, trade it, right? Trade it every day. Well, maybe not every day, but trade it on a weekly or biweekly basis if you can, and understand its price action so that you can determine without even looking at the chart. No, okay, at this price level, it's a go. I'm getting in.
Got it. Thanks a lot.
You're welcome.
That's all.
Be intimate with your tickers. All right, let's see. I think I got another question here. Are we heading for a stock crash? Who knows? Impossible to determine. Let's take a look at YouTube here and see who's got questions there. All right. Who else has questions on the chat? Or anywhere, really.
Hey, I have a question.
Okay.
This is more so just kind of for everyone else that is newer to the market. How would you help someone determine the value of a company? It seems like a lot of people are kind of newer and they're buying it at the top because they don't understand that certain companies are overvalued technically. So how would you help someone determine if they're buying it at a good price or if they're buying at a fair price?
For contracts and shares is two different things.
Shares.
Okay, for shares, you could probably look at the PE ratio. What you need to do is look at fundamental analysis. There's quite a few things that go into fundamentals, one of which is the PE ratio, earnings. Let's see. Hold on a second.
Like the total addressable market, the PE ratio is a good one.
Cash flow, return on assets.
Balance sheet.
Right. You could even go in as far as saying, who's the manager, who's been managing this company, who's the CEO, how long has he been in there, what's the track
Right.
record like while he's been in there, how do the earnings look, that kind of thing. Fundamental analysis is more along the lines of somebody that's interested in being in that stock for longer than 3 months.
Right. So yeah, for me personally, I don't normally do all that if it's just like a quick flip. That's more so like off the charts. But as far as like long term, I mean, that's something that I do is fundamentals and PE ratios to determine if I'm buying it at a good price. I just noticed a lot of people have been saying like their portfolios are red or they're buying really high. And I think it's just because lack of understanding how to do the research.
Well, it's honestly lack of understanding how to read charts. Because if you're buying at a high, you don't know how to read that chart properly, right? That's just the bottom line. You're not able to determine where's a good place to get into a stock because you're buying way too high, right? I mean, I think every trader's first and foremost um, skill set should be learning how to read charts. That should be the foundation of every trader is knowing and understanding how to read charts. If you can do that, then a lot of this other stuff, I mean, especially if you're not holding something for longer than 3 months, fundamental analysis is worthless.
Okay, I agree with you.
So, but yeah, I mean, if you're doing shares, you're buying yourself a limited amount of time to make money. Can't go wrong with shares. You really can't.
Right. Yeah, I just think a lot of people get into like some of these hyped plays, thinking, for example, like CCIV or Neo, and they buy them at the top because all the hype's around them. But when you really think about it, you're paying a lot. Like if you're not just flipping it and you're trying to hold those companies, like you're paying a lot. You're paying like years out for those companies.
Oh yeah, yeah. You definitely have to learn how to read support and resistance, and get into the stock at support.
Yeah. I
And that
mean,
way, you know you got a
it's
better
not
price.
super easy, but it's very it's what you need to know in order to not lose money.
Right.
All
Yeah,
right.
chart
Well, I
chart chart
appreciate
analysis is the best way to go in that scenario, especially for the time frame that you're talking about trading. Chart analysis is the best thing to learn.
Okay, I appreciate it. I just wanted to put that out there for
You're welcome.
newer people.
Okay,
Hey, also, do you ever use the analyze tab?
absolutely.
I heard you mention that, I think, in your last video, that's like a pretty important place. Like, what do you like? How do you utilize that?
Um, it's more for advanced trading. So like if I'm doing spreads or if I'm doing um, iron condors, uh, calendar leaps, or diagonals, things like that. It'll help me determine, value and time and how long it's going to take for that position at current price to show value, and things like that, right? It'll show you where you should be in profit and where you should be in loss, where your profit and or loss ends or continues. So there's quite a few things that really make that analyze tab super important. And the other thing is, if you're confused about a type of play, you could just run it on analyze and see. Like it basically paints an illustration for you and helps you understand direction and how that position goes down or up in value. Um, and like I said, you can adjust the time on it, which makes theta go, right? Theta is the time. So um, it's a really awesome tool to determine where you need to be in the future to see profit, right? So like if you're in if you bought a leap year out, you could analyze it and see where you need to be in say 6 months to have profit, right? So you want to, kind of it helps you plan for the future. It helps you plan your exit strategy, helps you plan your entry strategy, honestly. So there's really a lot of benefit to it.
Wait, so what I thought the analyze tab was just all the information about the company. You're telling me that you can like run simulations in there?
I think we're looking at two different things. Hold on a second.
Yeah, I mean, on mine it says analyze, and it has like the company profile,
Talking about this
overview.
thing
Hold
right
on.
here.
Mine doesn't do that.
Up here
Yeah,
at the
I mean
top,
that's where I'm looking at. But when I click my analyze, or wait, where do you up?
you got to go to risk profile.
Oh, I'm probably looking at. I didn't notice that second tab down there. Oh, okay, yeah. So I'm sitting here looking at the fundamentals.
Okay. Yeah,
Got it. I didn't realize that. Oh wow, I didn't even realize that second menu down there. Huh. Okay.
yeah. There's a ton of stuff here. I love Thinkorswim. This is fantastic.
Okay. Yeah. Cool. 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 I've only been using Thinkorswim for, I mean, maybe like 2 or 3 weeks now. So.
I mean, here is one example. Like let's say I wanted to do a spread, um, analyze a credit spread. I go to my risk profile.
Ah. I mean, I'm definitely not trading these kind of things. I'm just doing shares, but still cool to see.
Yeah, so I mean, the plateaus are, like I said, the top plateau is max profit, the bottom plateau is max loss. purple line is theta, and let's see, with this section right here with the date, I can change it. I can move it forward, and then you can see the theta line start to do its thing.
Yeah, that's pretty cool. So you can, I mean, it pretty much shows you how the play works out.
Right. So it's a really phenomenal tool. I mean, you can go in here and say, well, by expiration, I need to be at $23.28 to be basically a winning play.
Mhm.
Right. So this is a really cool tool. Here, I'll show you another one real quick. Let's see. All right, let's
That's
say,
silver, right? Does that actually follow the price of silver, or is that just like a silver ETF type thing?
what's an ETF that kind of follows it, so it lags behind the actual price. The spot price is around 27, I think, or 26. So it's
Nice.
$3 to $3.50 behind.
Okay. I haven't looked at the price of silver recently.
So what I could do here is analyze. I want to do a calendar. Let's see. And this one I want to sell the front month. So here's an example of, you know, this is like a poor man's covered call. Basically, I sell a short call, buy a long call. So I'm shorting the short call against the long call. And if the stock goes, I want it to go up, right? And this peak, there's a peak here, like the top of a mountain. That's where you get the most value, right? So at $25.08, let's see, I got, um, so it, yeah, $25.25 is max profit on this position, right? And then I move my time frame further up. So let's say I wait almost all the way till expiration of the 31st of March. Yeah, let's go to the 25th. So now at the peak, this is $61.48 is my profit if IV stays the same, right? And that's got to be at $25.04 for the stock price. Right, so this is how it helps me determine, you know, where my profit levels are, my profit targets, my profit levels. Um, you can see loss areas right on both sides here, right? So really awesome tool to help you determine what section of profit and how much you expect to see in a certain amount of time based off of IV staying relative.
Wow, yeah, that's pretty cool. But I mean, I guess if you're not trading complex things like that, there's not really any use for it then, except to
I mean,
maybe look up the company, the analyze part of it.
you could no, you could do something like this. Like say you get a single, right, and let's say you get into it. Let's say you're in the trade. Matter of fact, yeah, um, we'll just click on mine. I'm down on mine, so and it should pop up there. Not sure why it's not. Oh, there it is. That's the position I'm in. Say by excuse me. Let's say by the end of May, the last Friday of May, this needs to be at $29.29 for me to see profit. Right now, if IV increases, which is kind of where it's at right now, IV is up a little bit, you know, then I'm going to see value. I'm going to start actually seeing value on the theta line, not the blue line. Blue line is expiration. Theta line with the red. So you got the two red marks. Blue line with the red mark is expiration. Uh, Purple line with the red mark is current. Right. So as every day goes by, you see that little red line on the purple is starting to go towards
Yep.
the blue line, right?
Yeah.
So you can look at this and say, all right, I need to be this stock price by July 5th needs to be at $27 for me to break even.
Yeah. Yeah, that is pretty sweet. It's a pretty powerful platform they have here.
Oh, it's pretty awesome. Yeah, I love it. Okay. Do you have any more questions?
Yeah, that's all for right now. I'll probably think of more. Thanks, man.
Okay. You're welcome. All right. Who else has questions?
Do we have a section to learn like the theta, gamma, like all the Greeks in our learning tab?
So go to Professor Hostel in Education. I have a video that I made on Greeks.
Okay. Appreciate it. Thanks,
You're
bro.
welcome. No problem. GOJ155 asked, does Schwab have anything similar to Thinkorswim? They have Street Smart Edge, which is not as good. It's okay. It's not bad, but it's not the greatest.
Hostel, one more question. I know you said there are 2 tools that do allow for day trading on a cash account. And it doesn't matter how much cash is in that account. You can just day trade as much as you want. That's Webull, and what's the other one?
Thinkorswim.
Oh, okay. Nice.
I'm sure other brokers have it as well, but those are the only 2 that I'm really familiar with.
Thinkorswim charges for day trades, though, don't they?
They charge for option trading.
Yeah, so sorry, options. So if you're doing options, they charge you per option.
Correct.
Got it.
How you doing, Hostel? Can you take a look at what is the next big resistance for SPY?
For what?
For SPY. You know, when do you think it's gonna make a recovery? Like, what is the next support? Big support.
Maybe 370. 370, 367, 364, 362. I mean, there's a lot of support lines.
It's just that I bought a lot of shares today, and I don't know if I should have bought a SPY put for, hedge or not.
I mean, that's totally up to you whether or not you buy hedges, right? I mean, I don't really use hedges myself because the strategies that I do don't require them.
Oh, okay.
You know this.
Yeah, I know. I'm just this tank is really like fucking with me mentally, man. This is some crazy dumps we're in.
Well, I'll be honest with you, man. I've been saying it's going to dump in February since like November.
Yeah, I know. I remember asking you. It just I didn't expect it to be so sudden, and also I thought it was gonna start going back up when it reached 280, but it keep going down. That's why, like, I was thinking maybe I should have bought like a hedge or something.
It's shares. You'll get it back.
2020 hindsight.
Oh man, yeah, I guess so. I just had to wait a long ass time.
That happens. As long as you're in a position that you can afford to wait.
Yeah.
Okay. Did you have any more questions?
I have a question. Do you have any videos in your tab that talks about how to analyze or use the analyze tab?
No, I don't. Um, hard to tell you how I learned that. I mean, I just played with it, to be honest with you. You
Can
can,
you play it in calls that you're not in?
of course.
I was trying to figure out how to do that, but I couldn't figure it out.
So you asked, can you use the Analyze tab for speculation research, not positions are in, right?
Yeah, I just want to make sure that it's a position worth getting into.
Well, Analyze tab is not going to help you understand that or determine that. It's only going to tell you where the profits and losses are and how theta moves based off of current IV. It's not going to tell you whether or not, it's not going to help you determine should I get in here or should I get out or whatever. That's not really what it's for.
I understand. Thank you.
You're welcome. Okay. ERRK looks like they have a question.
Hey, Oslo. I like everybody else. I'm down. I blew my port on XL March 19th calls. So I'm thinking of just starting over. I was trying to hit a strike price at $30, and obviously it's not going to happen. So I want to start off with a brand new account at 500. What would you suggest?
Shares.
Just go into shares and keep it simple.
Yep. I mean,
yeah, it's my.
You lost money YOLO, and it sounds like, so maybe that's not something you should be doing. And I'm a big proponent on recommending people stop doing what's not working.
Yeah, hit a couple of them, and then kind of caught the wave and thought I knew everything, and gotta learn from my mistakes. Definitely.
Definitely happens to all of us. It happened to me, so don't think that you're alone in that game.
And you say these shares, like, so buying shares, right? I mean, you can use these same concepts. I mean, I see, for when people are pulling calls and things like that, would you be able to use the same concept in shares? I mean, am I getting that right,
Sure.
or am I misunderstanding it?
Why not? I always say shares are foundational trading. If you can make money doing shares, you can make money trading options. And
totally.
if there's things you're going to learn trading shares that are going to help you trade options. It's that simple, right?
Got it.
You can't walk before you run, right? I mean, that's just kind of how it goes. So trading shares is walking, trading options is running.
Gotcha. And would you suggest? I mean, in this case, right? I got 10-cent calls, right? Would you recommend just cut my losses or just play it out and say, Hail Mary it?
I mean, you're already at 90% loss, right, or more.
Right.
So
absolutely, yeah.
Yeah, they're basically toast at this point.
Probably be hard to sell them even.
Yeah, I don't even know if you could sell it.
Yeah, that's possible. Yeah, like I said, $30, way out the money.
I did the same thing like 3 months ago, and I started trading shares with Mario. It's been good.
I appreciate it.
Except for recently, but I think everybody's feeling that.
Okay.
So I got a quick question, another quick question.
Sure.
The other guy was talking about hedges, and I know Tilio has been throwing out tons of them, but like I said before, like I just strictly do shares right now. Like, do you even need to hedge with shares, or
No.
like, I mean, how do you even hedge with shares?
You don't.
Okay.
I mean, you could buy VXX shares, right?
So I saw. I mean, I looked at that, and like, I mean, that doesn't really, even when that's moving up and down. I mean, it's only moving like $1 or $2, if that. I mean, is that worth it?
Well, think about this: if you got $3,000 in a bullish position, and you got $3,000 in a VXX position, and the market goes bearish, you're going to make a lot more money on that VXX position than you would of the other one,
This is true.
right? Because the bearishness of it's going to add value. And if it only moves $1 right now, if the market continues to go down, it's going to start becoming more exponentially. It moves more, right? If it's only moving $1 now, it might move $2 or $3 once the market hits the bottom or starts going approaching the bottom. It might jump $2 or $3 then, right? And that's where you'll see your value add, right? But I don't
Yeah,
personally
that makes
do that.
sense.
I don't personally. I mean, the hedge for shares is to average down.
Yeah. I mean,
So
there gets to a point where I mean, like what's been happening recently, I think everybody's feeling it. And I set myself up for it. I started, kind of a half position on shares. And, I got in at the bottom of support, but we just broke through that support. And so obviously that didn't matter. And, when it hit the next support level, I, averaged back in, but then it broke back down below that support level. So, I mean, at one point you just kind of stop averaging down and just wait it out.
yeah, I mean, there is a point to where you should stop averaging down. I'd say 10% of your account value is probably a good place. But like I'm in LMT shares, and I've been sitting on this since January 1st, and I bought in at 358. It went down. My average is at like 350 right now. I've averaged down a few times. It went all the way down to 312. Now it's finally back almost near break even. It's at like 344, or at least last time I checked it was. So I mean, and I didn't average down at 312 because I'm just like I've got $3,500 in it. I'm not gonna average down now. Like I've already averaged down 4 or 5 times. There does come a point where it starts to become more than what it's worth, right? And once you hit a certain amount percentage wise in your portfolio or in your account value, that's probably where I would stop. Like I'm at about let's see, before I lie, I'll tell you where I'm at. So shit, hold on.
And I mean, I guess it helps that I don't care that they just sit there, because I can wait it out.
I'm at 10% of my account value into that average down position.
Yeah.
So I think that's a good place to stop at 10%. So you kind of as something is falling, generally what you want to do is you grab um, number one, you got to determine what's the trend. Is it does it continue to make lower lows? Is it coming up to support? What is it doing? If it's making lower lows and it's coming near support, you go in light, right? And set a bunch of entry positions for more shares at other support levels, and that way you don't even have to pay attention. If it gets to it, then you've averaged down, and the goal of averaging down is not to be at the same price as the average down, but to chase it as it falls, right? And you don't want it to get too far away, right? So that once it starts to come back the other direction, you'll be in profit sooner. You'll have more profit whenever, if you decide to get out at your initial profit target, you're going to have a lot more profit.
Okay, that makes sense. So kind of what you're saying is instead of, I guess what I took away from this is, start your position and then what you would think you were going to, like if I plan buying the position and I set aside enough money for percentage of my portfolio for one average in, I can take that one and split it up into two or three and kind of just work it down.
Right. Yeah. Yep.
Yeah.
Exactly.
Okay, cool. That makes sense. Thanks.
That's a safer way to average down, right? I mean,
yeah,
there's scenarios where you'll get in at support and then it jumps and you've ripped. It's like, damn, should have got in more. Should have put more money in, right? That happens.
Yeah.
But the way I trade shares is I'll get it support, and I'll either start with a 500 to 1,000, and then every support level below that will be, say, 500 bucks. If I get in with $1,000 and it jumps from there, so like say my entry, I start with $1,000 and then it just jumps from there and I make 100, 200 bucks. That's fantastic. Let's get out, because I guarantee you it's gonna retest that same place you just entered at, and it'll retest it. You get back in, and let's say this time it doesn't jump, it falls. So you're back in with 1,000. Now you got a $500 entry point at another support level, and it reaches that, boom, triggers it. Now you're at 1,500, right? It'll keep doing that, and let's say for every $2 the stock price falls, your break even falls $1. Right? So let's say your break even is 30, stock price hits 28, your averaging happens or initiates. Now your break even is 29. Right? That's kind of what you want to be after. So when you start small, or start out your position small, it's easy to do that. But when you start big, say 2 or 3,000, and then each average down is $1,000, it's gonna be a lot harder to chase that price downward.
Yeah. So that makes sense. But so what happens on the inverse? If you start your position, your half position or quarter position, it just starts ripping. You just leave it at that and take your profits.
Yeah, I mean, you can set a trailing stop loss and protect your profits and whatever.
But I mean, what I'm saying is, like, you'd initially planned, like, hey, I have 5% set aside for this trade. I'm going to go in 3% right now or 2% right now and see what happens. If it starts ripping, there's no point of adding more.
Correct. You don't want to add more. No.
Yeah. All right.
Because you're chasing now.
Yeah. And what would you, when you're trading shares, what percent are you really looking for, just to be like, all right, I'm done? Like that first, 5 or 10%, or what are you looking for there?
5 or 10% is a fair number to look for. But again, here's the thing: is majority of the time, more than not, when I'm in a position of shares, I look at my phone and I go, whoa, look at that gain. It's usually 15 to 25%.
Yeah, I heard you say that earlier. And that's when you take it.
Yeah. When I look at it and I see 18% return on shares, I'm like, oh shit, I'm taking that. Or at least I'm going to set a trailing stop loss.
Yeah.
So.
All right, that's cool. I feel like sometimes it's just, I mean, I guess I'm not really in this position, but I feel for some people with shares, like, I know you probably got a bigger portfolio, so you're seeing a lot more return than lots of us. When we start off doing shares, 10% of, position that we might be in is only, maybe like $25. It's like, so, but I mean, adds up, compound, make it more.
Well, whenever you look at it percentage wise, you're never going to look at dollar amounts. You're only going to look at percent.
I mean, 20% is 20%, 10% is 10%.
Whether or not you've got 100,000 or 1,000,000.
Yeah.
Percentage is percentage.
Yeah, and I think you talked about in that one of your lectures, it's like, you look at the numbers now, and that's why you should always look at percents now, because once you get up to $1 million, you're not counting the money, you're counting the percent that you're getting.
Yeah, and that percent that you're getting at $1 million, in the market, or 500,000 in the market, 5% is huge. Like, it pays for your whole entire lifestyle for the month.
Yeah. Good stuff.
And one other thing I want to say about shares is, anytime you get into, or you're trading shares and you're looking to average down and stuff like that, treat every position as if it's going to drop below your support level, right? Treat every single entry as if it's going to go below that one, right? So example, you look at a stock, it's got 6 support levels. Well, you got whatever 5% of your account is, you put, say, 1 to 2% in your initial position, and then you divide the rest of it up into 6, right? And then every time the stock falls and hits that support level, boom, it initiates, right? So the goal, honestly, shouldn't be I want to get in this and see it jump. Your goal should be, I want to get in this and then plan all of my entries at support levels, because ultimately you want that whole 5% in, but you don't want it all in at the top of your entry point. You want to honestly, as I said, shave it off, right? Shave off the break even value. As the stock falls, you add a little bit more to it. And if it doesn't, if it just jumps, put in a minimum that will be a decent return if it jumps, right? So if you got 2 grand and you've got, um, let's see, 4 support levels, you're getting in the first support level with $500, and then the next 3 you get in with $500. That would follow the stock price very, very nicely if it falls, right? And your average down, if you average down, let's say supports it every dollar at 29, 28, 27, 26, or whatever, and you get in at say 29, stock price falls, it's 28, you get in at 28, now your break even is 28 and a half, right? And then the stock price goes to 27, you get in, well, whatever the difference in price from 27 to 28 and a half is, was that 150, subtract or divide that by 2, now it's 75. You've just lowered your break even another 75, right? So instead of being 28.50, now it's at 27.75, right? And the stock price hits 26, 175 divided by 2, whatever that number is, just subtract it from 27.75. That's your break even, right? So you basically follow the stock price downward. That's the goal.
Yeah.
And if you're able, if it initiates every one of your entry positions, now she's going to show really nice. Now you're going to see 25 to 35% return if you go for your initial profit target.
Yeah, that makes sense.
So that's how I trade shares. I don't
Okay.
look to see, I don't get into it and be like, all right, come on, jump. I get into it and go, all right, how much lower is this thing going? And how many positions can I get into? How many entry levels or support levels can I get into with my entries? Right? How much money do I need to divide into all these positions to make it follow the stock price downward? Right? So that's how I look at trading shares.
Yeah. Cool. Good insight.
All right. Who else has questions? Let's see. Let me check all the chats here. I kind of slacked on that a second. It still looks like the same on YouTube. Okay. Looks like it's caught up. All right. Who else has questions? Joshua, I don't believe that is the case. So Josh asked if I think the drop in the market is due to I guess you mean Wall Street bets doing their shit to GME. So people are now worried about putting their money in the market. No, I don't think that's it at all. Well, the market just is correcting. I've been calling for the market to correct, and I swear I nailed it. I said middle to late February. So let's see.
Is there so there's like a drop in the market and then there's like a market correction. Like what would you put a percent on those values? Like, hey, if it's just a drop if it's like, between 2 and 6, and then it's a correction if it's like, 10 to 15, or like, can you look at it that way, or is it always just,
Well,
the stock does what it wants to do?
they look at it that way with the SPY and Dow. Market retracements 2.5%, market pullbacks 5%, a correction is 8 to 10%, a recession is 15%, and full on depression is 20% or more. Supposedly that's how they view it. Um, but as you can tell, there's other stocks out there that drop way more than that, right? Like PLTR, that one's lost what, from 41 to hold on. Let me take a look. 45 to 24. That's almost 50% drop. You know, Neo did the same thing. Laser, Lee.
They're sitting in the Great Depression.
Yeah, I mean they're really crushed. But that's the thing here is, I expect that to happen. I've been expecting this to happen, and when they judge the market drop in percentage and start saying recession, pullback, whatever, they're really just talking about the SPY and the Dow.
Yeah. But I mean, because that's the overall trend, so that's, yeah.
Right.
But I mean, and again, those, those stocks that you just mentioned, I mean, they're all pretty good. I mean, they're going to come back. So
Right.
just wait it out.
Yeah, and that's why I always say, you trade shares, you do CSPs.
Yeah.
It's a
So
win-win.
when you are waiting, like, you get into something and it drops, like I'm sure, again, many people have experienced that here over the last couple of days, and you're waiting, you just wait it out for, to climb out, once you start, and it's a good stock, like, Laser or something like that. Like once you start to get to break even, a month and a half down the road, at that point, do you just take your money right when you're even, or do you keep looking at the charts and be like, all right, this can go higher, because I know the support and resistance?
Well, I I do CSPs. If I get a sign, I get 100 shares. So when that happens, then I'm looking to sell covered calls on it. Right. And I'm not going to sell covered calls below the strike that I got assigned so that I can keep initial premium plus whatever the covered call premium is going to pay. So that's what I do. I wait for a nice pump. Let's say, example, strike at $30. I'm in PLTR at $30 strike. My initial, let's see how much they pay me for that. 400 bucks. So my break even is 26. Right. So I'm down right now $1.17. When this stock price jumps back up to say 28, 27, 28, and let's say I own shares now at the 30p, I'll sell a 30p when the stock price jumps to 27, 28, and let's say that's a high point, right? Let's say it goes from here to 27, and then I sell a cover call at the 30p when the stock price is at 27. I'm going to get a pretty good return on it. I'm going to get a 10 or 15% premium based off of my leverage, right? So if I got $3,000 in there, I'm going to get at least 300 to 400. Well, I would like to at least get 300 bucks for that position. That's 10%, right? So I'd sell a covered call on it, and then the stock drops. So let's say it's turned into a uptrending stock now from a downtrending one. So let's say right now PLTR is neutral, it's going sideways, and then at some point it jumps and it hits 27 or so. I sell a covered call there. Stock price falls. In that scenario, I may sell. I may sell that position depending on how much return, because if it's an uptrending movement, it's probably gonna at some point in the near future cross that 30p, right? And what I want to do is try and recycle as many times on that 30p as I can before it hits it, right? And then at that point, it's like, well, if I've done this 3 or 4 times and I've collected 400, 500, 600 bucks on it, plus the 400 that initially gave me, now I'm at $1,000. So now the shares are worth 20 bucks instead of 30, right? And if I let them go, so let's say it goes in the money when I sell a short call at 30p and I let them go, that's totally fine because I made $1,000 basically, right? So, but if I and in this scenario, like I don't see PLTR like going to $100, so I would probably sell 30p's on this thing until it takes it from me, and I'm good with that. But like Fastly, I got CSP on Fastly. Um, this one, It's actually been dropping still. It's coming down here. It's probably going to hit this $62 low. And I'm in a 75p here, right? So, but I got paid 700, so it's worth 68 to me. But I'm totally happy with taking shares on this because it's gone up to over $100 in the past. Right. So what I would be interested in doing with this one is the same thing. Sell covered calls. So let's say it jumps back to 80 bucks. I'd sell a short call there and then it falls. And when it falls, I get out. And then it jumps and breaks past 80. So let's say it goes to 83. I'd sell another one there. Boom. Then it falls. Because you see here, it jumps, falls, jumps, falls, jumps, falls, jumps, falls, right? So I can
Yeah.
basically trade this, short calls. If I can time it right, I can get in and out every other day, make $100, 50, 75 every other day, make $500 to $700 a month, or I'm sorry, a week. And then as I'm doing that, I'm raising the call price, right? So instead of, I'm selling an 80 call, then I get out, sell the 83, get out, sell the 90, get out. And if I can follow it all the way up to $100, then I'll start saying, all right, I think you can take my shares now because I went from, $75 to $100. So I made 2,500, number one, plus all the premium that I made off of that, shorting those calls. So there's stocks out there, in my opinion, that are fantastic to get into like this, and you want it to go against you. Like I totally want this to go against me because when it does assign it to me, number one, I'll keep $700 in premium, and then the moment it starts to go retest these, it starts to get bullish and start coming back up, I'll start selling calls on the thing and flipping it every other day. That's how you make big money, and you flip it whenever as quickly as possible, right? Try to make that quick $50 to $100. And if you can make quick 50, $100 every other day, that's really great profit. I mean, let's say 3 days out of the week I make $100. That's $300 in the week, and then each $100 that I made, I move the strike up, right? So I move it up $2. So I start at 75, move it up to 77, and then the second time I do it, now I'm at 79. The second time I do it, or the third time, now I'm at 81, and then the fourth time at 83. So I just made $800 plus $100 each time I got in and out of that position. So now we're looking at $1,200 of profit at the $83 strike at that point, right? And if Fastly keep going up, you got a profit target, right? My profit target for Fastly is 100 to 105. Right, so give me shares. I'll keep the $700 in premium. Give me shares. And I'll start selling short calls on this thing at my initial assignment price, which was 75. I mean, let's see right now how much is 75 strike worth. 15-day expiration. Probably not worth much. Still, I mean, $181. So if I was in shares right now, I could sell this $75 strike. Oh, it's actually 141. I'd get 141 bucks for it, and the chances of this coming back to $75, I'd say aren't awfully high. Delta of 24, so it's basically a 25% chance of going in the money, right? So I like short-term expirations because theta is really killer. 75 here, so I mean, like it's $12 theta every day, right? Tomorrow 75 is really not showing shit. But I mean, 15 days out, we're looking at $141. Um, I could do weeklies on these. If something looks good, if it's at the money, and it's a resistance point at the money. Like let's say the eight days out. Let's say the stock pumped, and now we're at resistance. I can sell 395, and in 2 weeks, let's say tomorrow or the day after, the stock price falls from 64 to 58, this 395 is going to be showing a 50% return at least. Then I get out of that, wait for it to pump again, breach the resistance point that I sold initially. Then it goes to the next resistance point. And I sell calls on that one. So it's actually, to me, it's like a video game. Can I beat the video game? Right. So if I can beat this video game, I'd be very profitable. It's
You'll be
fun to
winning.
play. If I'm never a loser, it's always, always, always fun to play because you're always winning. All right. Let's see. Dakota has a question. Dakota, you there? Got your hand up.
Oh, sorry, I was on mute. I didn't realize. So my question was, what's the, I guess, when and why would you be selling a call or put that's at the money or in the money? Because I mean, I don't even know if you would do that because couldn't somebody exercise? Like, I'm not sure how that works.
It depends. Time, if it's a lot of time on the expiration, it's very, very low chance of assignment or exercise. If you've got 2 or 3 days left, then the risk is higher.
Right.
Depends how far in the money you are, or it depends how far against you the position is. Right? You buy an options, you want it to be in the money. You sell options, you want it to be out of the money. So it really all depends, but the chance of assignment is pretty low unless you're really, really, really deep in the money, and somebody's probably potentially going to execute that contract to close out. And it's going to force you to exit that position or force you into, you said selling.
Yeah, I didn't know
calls and
if
puts?
somebody would sell a call or put in the money or at the money.
I mean, you could like that. So the only reason why you would want to sell, call, or put at the money is, or I'm sorry, in the money is if you think the stock price is going to go past it. So I mean, like let's say it's a support level that's really strong and it just breached it for a little bit, I'd buy $1 or two, and it's very likely that's going to come back. If I'm doing cash secured puts and I go in the money, and let's say like right here on the 67 strike, this is going to at 67 right now being in the money is going to pay me more than when it's at the money. It's going to be worth around 230 to 240 at the money, whereas in the money it's worth 375. So as long as the stock price doesn't go lower than when you actually entered the position, you'll see profits on this in the money position, even if it doesn't go to 67. Let's say it goes to 66 and you got in at 64, you're going to see profits on that.
Okay. So I have one example. I don't have any positions in this, but this stock called SKT, I saw there is $1.2 million option activity at the money towards the end of the day today. So for me, I would assume that they are selling those calls.
Probably,
That,
but
would you think
I
that?
wouldn't use that as any kind of barometer to determine anything, to be honest with you, because that's a recipe for disaster.
Right.
So I wouldn't
Yeah.
even use that. Stop using that because that's gonna paint a picture that's incorrect.
Right. I don't know. I guess I'm trying to figure out how to interpret option activity like that.
I would tell you not to pay attention to activity at all. Only activity you need to pay attention to when you're doing options is open interest. That's all. Anything beyond that is smoke and mirrors.
Right. So I've heard that the reason why the market's so volatile that it's because of option activity? Like it's actually driving prices somehow? I don't know how that works, but what do you think about that?
There's nothing that anybody can say that will give you a reason why the market's doing what it's doing. The only thing that I can tell you about the market and why it's doing what it's doing is this is what it historically does. So if you can understand relatively how the stock market moves, you can anticipate when it's going up and down.
Right.
Beyond
You
that, I
just
wouldn't put too much effort into it.
so you're just saying like seeing the trend, and then once you know which way it's going, that's how you base your decisions.
Yeah. And I mean, at some point, that trend's going to change, right? So you got to be okay with being in a position where the trend changes and it goes against you, because that does happen. It's happening right now for a lot of people. But if you're in a position like me where if it goes against you and it's still okay, it's not huge losses. I mean, it is huge losses. Like when I look at my account value, went from 102,000 to 95,000, right? But that's across 3 accounts. And that's multiple plays in the market. So I mean, I've lost 6, 7% on my account so far, which is fine because even if it stays against me, I get shares and then I get to live to fight another day. So it really depends on the type of positions you're getting into as well.
Right. Okay. Thank you.
You're welcome. Okay. Who else has questions? A lot of people I don't recognize. There could be a lot of new folks.
I think that Pokemon thing brought a lot of people, whatever that was, people paying friggin' millions of dollars for a card.
Oh yeah, I saw that video. That was crazy.
It was insane. I had no idea those cards were worth that much money.
That it's crazy how a card of a little cartoon character is worth that much. But
No, it's insane. But so is half the crap out there. Like the banana on the wall.
right. Josh Bailey, at what point do you stop doubling down on contracts and just take a loss? I personally wouldn't double down on contracts, but each position makes a difference. Each position is different. You could potentially double down at support levels, but you're really increasing your risk exponentially when doubling down. And options, especially if you're buying, you should really just think about when should I take a loss, if anything. When you throw more money at a losing position, it just continues to lose. So, I mean, if any of you here have questions you think are noobish, I mean, it's totally fine. Everybody's a noob at one point. So don't be afraid to ask any questions. Anybody else have any questions?
It's a quiet night.
Yeah. Okay, Jake.
So I got another one, if you don't mind.
Sure.
So currently I was in a contract on CBAT and it showed profit twice, so I didn't take it, but that's my fault. But I ended up losing on it and I averaged down 3 times. So I learned not to average down that much. But on that company, they currently are down to about $4.20. They were at like $7.95 or whatever, like a week ago. Would you consider buying shares of them? Or do you think in a time like this, it would be to let it keep going down and try to buy it at its lowest point, even though considering it's down literally half of what it was about a week ago? I mean, how much lower can it go?
what you could do here is start slowly.
Like
Um,
like a 10 or something like that.
well, I mean, 5% of your account, put in 1%. Like, so each position, 5%. But this particular position, you start with 1%, and then you add your 1% as it falls. So you could add 1% at, say, 384. So let's say you get in now, throw 1%, add another percent at it, 384, add another percent at 335, another one at 312, another one at 285, or something like that. But it's definitely trending downward.
Okay, so either let it ride down or just get in and slowly average down, like so that way in turn I don't buy a whole bunch and then it's down again.
Yeah, just slowly add to it, like, or slowly buy and build a position, and as it falls, you just kind of add more based off of support levels.
All right, appreciate it.
You're welcome. Go ahead, Johnny.
Hey, Hostel. So Ashley tried to explain it to the chat, but for shares, I know you're explaining how like as it's going down, you just want to average in your port and stuff like that. As for profit or like price target, I know how there's like small caps, large caps. There's $2 stocks versus 200. What's a good starting point for me to, because I yeah, it's like the market's shaky and I want to start from the basics, like you said, and just go back to the shares. But I don't know what's a good target because, like, 10% on a $2 is like 2 cents versus like $2 on a 200 or on a 20. Sorry, it's like, how do you what's something like that I can start making a habit of and just not be too greedy, but still be able to be profitable and like you always share compounding the money and compounding it. That is just yeah, I just don't know like how to, because I've prior to the dump I've had a couple of shares and some of them are like 20%, some of them are 10%, and some of them are like 2%. And so I didn't know where to draw the line and take the profit.
Well, that's always a challenge for everybody. Where to take, when and where to take profit. When I do it, it's based off of time, right? So like the first 2 days of me getting into a position, and this is strictly speaking of cash secured puts, not shares. Um, but I'm giving you this as an example. When I'm in a position, um, shit, I forgot where I was going. I just lost train of thought. Ask your question again.
Yeah, just basically when, like, what's a good gauge or like kind of rule of thumb or habit I can form in terms of like, because I know profit is profit, everyone's been sharing saying that, but in terms of shares specific, because I want to do CSPs eventually like you and FaZe, but right now I have to start, I have a smaller port, so I want to
How
someone
much are you
shared
starting
earlier.
with?
So it's been on and off. So it's anywhere between 2 to 5K. So I have like a couple accounts. I'm thinking of possibly just merging it. But they range from 2 to 5. And I want to start with shares again. And I just don't know how, because I don't want to just like when it goes up $1, I don't want to be like, oh, okay, profits probably take it, like, because like I don't know if there's like a gauge, like you said, oh, 10% is a good like target, or I just want to start forming like better habits.
Start
And
looking at resistance levels instead. Don't
support levels. Okay.
resistance.
Or resistance. Sorry.
Yeah.
Yeah.
So,
Oh, okay.
maybe consider getting out of something right before it hits resistance. And if that meets a 5 to 10% criteria, that's great. Or higher, that's great. But if it's like 1.5 or 2%, well, the real question you got to ask yourself is, was your entry good? And if it was a good entry, then that resistance level must be a weak one, right? So, typically when you get into something, you're looking for a resistance level that's going to make you some money, right? You don't want to get into something, put $2,000 or $3,000 towards it, and you only see $100 or $200 in return. You know, you're looking for $300 to $500 at least. You know, so um, I think resistance is the best way to do that. What you're trying to do, or what you're trying to accomplish.
Yeah, that makes perfect sense. Because I mean, like I said, there's small caps, large caps, and obviously like it looks like a larger jump, but it's only like a few cents, if not like a few dollars. Whereas like for bigger stocks, like a small move from between resistance support can be like $20. And so I just wanted to like see if you had like a rule of thumb, but no, that makes perfect sense. Just support and resistance levels, entering support and then selling resistance. Yeah, it's been hard because I've been looking at all these stocks and I've seen a lot of penny stocks. I've seen a lot of mid, large cap, and I'm like,
Trade
this is
stuff
good,
that's
but
between 15 and 50.
dollars.
Yes.
Okay, cool, awesome,
And
thank
if
you.
you've got 5
Yeah,
grand, maybe do 2 or 3 positions total. Right?
that's also what I'm trying to work on. I think I over leverage myself like hard,
I
and
mean,
that's one thing I want to try to
it's
fix.
not a bad idea to get in heavy with shares because it's a long waiting game if it goes against you. But what you really want to do is with 5 grand, you know, you're looking at $2,000 positions, right? 2 plays, and you got an extra $1,000 to do something with it, right? You're really limited at 5 grand. You know, when you get into with 10 or 15 grand, now we're looking at saying, all right, each position can be roughly $2,000 a piece, and you know you've got 5, 6 positions, and then you've got an extra 4 or 5 grand that you can throw at some of it if it goes against you, right? If some, out of those 5 or 6 positions, 2 of them are going against you, they keep falling, you got money to average down on them. And then the other ones, when you see profits, you know, let's say it jumps and it goes and wicks on a resistance point, get out, right? Get out off that one because if it's wicking, there's a chance it's not going to go any higher. It must body all the way up. It must body past resistance points. And even then, it's like, it's got to close up there, it's got to open up there, and it's got to continue going. So, you know, pay attention to that.
That makes sense. Thank you.
You're welcome. Brandon, you have a question.
Hey, Hustle, how's it going, man? I appreciate this. So my portfolio is around 9 grand. It's all shares, and I've been kind of like interested in like the selling of call and put option. I obviously need a lot to learn. I was going to ask like what resource to leverage, but like what account size do you recommend before like you can like actually do? Because my fear is always the option being exercised, and I was also curious, like for someone with like small portfolios, like once like you explain the threshold, like could you do it with like smaller stock in terms of like prices?
Well, with 9 grand, I would say if you're going to do CSPs, stick between the $20 to $50 range, right? I mean, if you get something at $25, you can do 4 of those or 3. And if you get something at $3,000 or $30, you can do 3. Right? If you get one at 50, you could do 1. Right?
Yeah.
So if it goes against you, it's fine. If you're selling cash secured puts, you're going to own shares if it goes against you. Right? And there's ways to manage that position so that you can prolong it from giving you shares. So if it goes against you, at some point and the stock pumps but doesn't go back out of the money, you can roll it off of that pump and buy more or sell more time or uh, sell a lower strike. So there's ways to manage positions in this scenario. So 9 grand is not a lot. I personally recommend 20 minimum, but I mean you can do it, right? You can definitely do it with 9 grand. I mean, the one thing that I would say you could be really successful at is like PLTR, right? For example, past 2 weeks, this stock's been acting crazy, right? So let me just see. Yeah, basically the past 2 weeks. So let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days, 13, 14, 15, 16. So since 17 days ago, this thing's been dropping. Well, I got in one position at 30 and it dropped down to 25. And I got in at 25 and it jumped and I flipped it. Right, I sold 3 contracts. Those 3 jumped back up literally the next day. I got out the next day for like $250 profit, right? And then it fell again down here to 23 something, buy back in, get back out at 26 or something with like $150 profit, falls back down. And you could do that with PLTR with $9,000. You can get 3 contracts and continuously do that. So like you get in one, use it as a barometer, and then whichever direction the stock goes, you can basically use that as a scale to say, okay, it's swinging downward or upward or trending downward or upward. And this point that you got into initially, so let's say you can get 3 contracts. Well, the first one's 1 contract. Then the next 2 are going to be the ones where it goes to the bottom. It tanks, it drops. Then you get in, boom, right? It jumps, you get out in a day or 2, right? And then it tanks again, boom, you get in. Right? That's what I've done the past 2 weeks. And I've made probably 700 or 800 bucks off just PLTR alone. And I have one
Okay, awesome.
contract that I've been
Appreciate
stuck
it.
in for a while, since 2 weeks now. So
Are
that
there
one,
any recorded lectures or anything like that to kind of like cover CSPs a little bit more, or any other resources we have?
not at the moment. There's, I mean, there is one, but it's called the wheel strategy, and it discusses cash secured puts and covered calls as a wheel
Okay.
strategy. That one's in my channel, so you should be able to find that on the pin. It's pinned in the pin tab. Look for the wheel strategy video, and that may help. I think that's a pretty solid video for this type of trading.
Awesome, man. Thank you. I appreciate it.
You're welcome. Okay. Who else has questions?
Where do you buy your silver from?
Physical?
Yeah.
Appmex.com.
App next.
Appmex. APMEX. There's a couple other places out there like JM Bullion.
That's who I use. I
A
was
little
just
bit
curious who you
cheaper.
used.
I buy from Appmex though because I get what's the damn Credit Suisse stuff. I buy Credit
Credits.
Suisse bullion.
Wow. Do you just buy silver bars? Or do you actually mess with like the different coins?
I don't really do coins. I don't do that whole, what do you call it,
So you
collector's
just
coins. I
you just
just
buy
do straight.
for the weight?
Yeah.
Yeah.
I mean, I buy nice pieces, like not like I get the stuff that's like Canadian Maple Leafs. I get Philharmonics from Australia. I get um, Silver Eagles. There's another one out there.
So those are coins.
Yeah, they're coins, but they're not the. There's a particular word that they use for collector coins.
Yeah, they're above spot value too, though.
Yeah, they're way above. They're super expensive, some of them, and
Yeah.
I just want nice quality coins that are spot valued,
Yeah.
and that's what these coins do for you. Really
Like
pretty.
but those coins won't, like these types of coins won't ever increase in value other than what silver is, right?
Well, whatever the spot price of silver is what the coins are worth.
Yeah, but I'm saying like they won't have any other monetary value like those other coins we're talking about, you know?
I
Does that
mean,
make sense?
they're only going to have the monetary value of the face
Of
value.
silver. Yeah.
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 But the beauty is when you buy like Canadian maple leaves or silver eagles or something like that, like a mint made, like government mint made,
Yeah.
those are going to hold more value as far as they'll stick closer to spot price than say, a Buffalo Bill Eagle coin or whatever the hell, like the low. So you've got, what are they called? Smelters or miners. Some of
Oh yeah,
them
yeah.
produce, and then theirs is like less than spot. And then you've got the really expensive coins that are really way higher than spot, like 15-20% higher. And then you've got the maple leafs and the silver eagles and the philharmonics, and all of those are going to be like 90 to 95% of spot.
Yeah.
So I try to get stuff that, I mean, I've got multiple uh, safety deposit boxes with like tons of silver. To be honest with you, I mean, I probably paid $200 or $300 in safety deposit boxes,
Jeez.
and
Yeah. I started. I've only bought in silver bars. I started buying them like 2 years ago.
so I mean,
Yeah.
I've got like 10-ounce bars, I've got 100-ounce bars, I've got 5-ounce bars when I
Yeah.
want.
Well, I'm just buying the 1 ounce and 5 ounce right now.
What I
But
would do if I were you is just get like a tube of Canadian maple leaves, or a tube. I mean, I think the maple leafs are the cheapest out of all of
yeah.
them, and it's funny because they look the best. Um, but you want to get a face valued mint printed coin that's the cheapest and still holds value to spot. And I think
Yeah.
maple leafs are the ones that do that perfectly.
Hmm.
I buy gold as well. I'll get a lot of the gold that I get. I mean, I've got, some ounces here and there, but I really like gold in smaller pieces, because if the world goes to shit and I have to rely on precious metals to buy stuff, I can't really do it with an ounce of gold.
Yeah.
So
Having a brick of gold is not going to do any good.
I buy like gram bars. I buy these little American Eagle coins. They're about the size of a dime, maybe a little bit smaller. And I
Yeah.
think there's like 20 of them that go into 1 ounce. So I got a little satchels here and there in all of my safety deposit boxes of those little gold coins and some silver, right? So it's all spread out. Nothing in my house because I don't want to give anybody a reason to want to try to rob me. So um, I love gold and silver, but you run out
I
of
haven't.
money fast.
Yeah. I haven't moved up to gold yet. I'm still just on silver.
Yeah, just so they tell you, do like 70-30 in gold and silver. So 70% in silver, 30% in gold. Because silver, number one, is going to go up in value a lot faster than gold. Um, Silver is also an industrial use. Silver also allows you to purchase things at smaller values if you need to. Um, but like if you've got like say 10 grand worth of um, gold and silver, you want to be 50-50 on the dollar amount, but you're going to basically be about 70-30 on the ratio, if that makes sense.
Yeah, because of the difference in price.
Right. So you basically want to go for 50-50. So if you're buying 100 ounces of gold, I'm sorry, 100 ounces of silver, then get the same equivalent dollar value in gold.
Yeah.
Yeah. So,
I like looking at it.
yeah, I do too. It's really pretty. Let's see. I got another question here on Zoom.
I had a quick question.
Okay.
At what point should I consider buying silver or gold?
Um, Well, there's a general rule of thumb out there that says you should have 10 to 15% of your whole entire net worth in gold and silver. So, if you're worth $100,000, you should have 10 to 15,000 in gold and silver. So, if you're a gold buyer or silver buyer, you shouldn't really care about how much it costs because you're buying for 10 to 20 years from now. You never buy gold and silver just because you want to flip it. Because if that's what you want to do, you're looking at the wrong thing. So if you're going to buy it, the best time to have bought it was prior to COVID. It was really cheap. Now it's it's retested highs basically. So I mean, I personally would wait to buy gold and silver. It's been a decade. I'm sorry, it's been 2 decades since I've been collecting, and it's going to keep going up, in my opinion. I think in the long run, gold and silver is going to really jump. But there is an ETF out there that I really, really like as far as um, silver goes. It's called PSLV, and all they do is purchase real physical metals. They don't do contracts or anything like that. So whatever money you put in there goes straight towards actual owning of silver. They won't, however, allow you to exercise your money to take silver, possession of silver, unless you're doing 10,000 ounces. Right? They call it a basket. They will allow you to exercise your position if you own a basket's worth, which is 10 1,000 ounce positions. So 10,000 ounces, basically, you can exercise position out of P-Silv. But I think it's a really good stock to invest in if you want to uh, do some leveraging as far as, you know, getting a percent of what you're investing in to be in precious metals. That would be maybe a start. I don't normally recommend paper silver, but P-Silv actually buys real silver bars. So at least your money's not just fake contracts, it's actual physical metals. Um, and it holds value pretty well. It doesn't tank like silver, SLV, that thing, it'll get crushed. All of the positions I'm in as far as precious metals, they're all down except for P-Silv. I'm still showing value in that position. So I think it really holds pretty well.
And I feel like people get into it for different reasons also, because some people get into it as investment, to diversify, but some people also collect it for uncertain reasons, and because that's always going to be universal money.
Right.
That's why it's up right now during COVID. I mean, that's why it jumped, when shit hit the fan and people were uncertain. Everybody was like, all right, time to buy gold and silver, just in case. So there's different reasons to have it too.
Well, yeah, I mean, uncertainty is number one reason why people flock from equities to precious metals. Um, Uncertainty really does that. It's like if we're about to jump into war, and it's going to be like over there in the Gulf where Iran is and Saudi Arabia. That's going to disrupt the supply of oil and et cetera, et cetera. That brings about tons of uncertainty. So that in that scenario, you'd expect gold and silver to fly through the roof. Um, if you're a collector, price shouldn't matter. If you're a hedger, I mean, I guess price does matter. If you are someone that plans for stuff like what we're talking about, futuristic situations where fiat money is no longer a thing, you know, price shouldn't matter at that point. They always say precious metals is a way to preserve your wealth. Um, the argument out there is, what can 1 ounce of silver or 1 ounce of gold buy you? A fine silk suit for 1,800 bucks. I think you can get one. 100 years ago, 1 ounce of silver would have bought you a fine thing of silk suit, right? And I guarantee you, 20 years from now, An ounce of silver is going to still be able to buy you that same fine silk suit. But once we start talking about dollar bills, well, 100 years ago, the US dollar was worth way more than it is today. It's been eroded by 99.9% of its value, and it continues to be eroded. So, you got to look at it that way.
It's about to get eroded again real
Thank you.
quick.
You're welcome. And yes, it's probably going to start happening. I think silver should jump soon, silver and gold. I think about June, you're going to see them really pumping. June, you're going to see new highs on silver and gold, in my opinion.
Yeah, and I don't even really pay attention to the price that much, except when I'm buying it, and even then, I'm not even really worried about the price. I kind of buy it on routine.
Yeah, I mean, if you allocate a very small amount to buying
Yeah,
it all the time, I mean, that's not a bad thing. Or, like if you're putting $100 aside, every time you want to buy something, and then go buy a tube after you got enough to buy, whatever the tube costs or something.
yeah, that's basically what I've been doing for the past couple of years.
Yeah, I really love the tubes because it's like just the way the coins come out of it and the way they feel in your hand and the sound they make when they clink against each other. It's nothing like it. There's really
Yeah,
not.
I should buy coins. Like I said, all I've bought is bars, and like some of them I put in like the plastic cases for them, and it's I don't know, I like it. I have like tubes for the bars too. Um,
The
but yeah,
bars were fun. That's what I started with. And then I started getting to the point where I'm like, man, these 10-ounce bars are really taking up space. I'm gonna have to start doing something else. And then I started doing coins, and I've got about, how they have those big boxes of
yeah,
coins. I've got
yeah.
about that much of coins in three separate locations. That many coins per location. So I got a shit ton of fucking coins. I got a big box of
Mm.
Eagles. I got a big box of Philharmonics and a big box of the damn Maple Leafs. And then, I've been trying to stack my gold holdings to match, you know, similar to that, right? So if I've got 30,000 in silver, I need to have 30,000 in gold.
Yeah. Do you use cash? You ever look for silver coins?
Not really, man. I just buy.
Just buy them.
Yeah, I
There's
mean,
there's there's people out there, man. I've seen like I've getting lost in YouTube. People go to like banks and cash in like you know $2,000 and get like rolls of coins, and they'll go through them and find silver coins.
that's such a man. I used to do that. That is a pain in the
You used to do
ass.
that?
Yeah, I used to do that when I started like 12 years ago or 10 years ago. I was, or sorry, not. I started back in 2001 when I got out of high school. I bought my first silver coin. Back in 2012, I was doing that thing that you're talking about. I'd go to the bank, and I was even doing it with copper pennies. I'd go collect all the copper pennies. And I realized by the time I collect what I'm really trying to make, it's gonna fucking take me years. So it's a waste of time.
Yeah. I've never done it, but it's interesting to see all the people out different ways they collect it.
I mean, you're better off like stripping copper wire and
Yeah.
taking it to the industrial place than
So
trying to separate coins for silver.
did you have to roll them all back up to bring them back?
Um, so I'm lucky. I know a guy that has an account at this one bank where they've got one of those machines where you can just dump your money into.
Oh, nice.
Yeah, I used that, and then I was like, all right, I'm gonna dump all this in here, and then we went to the teller and he gave me my money. So it's pretty badass. I like those things.
That's pretty good.
All right. Anybody else?
Yeah, I got a quick question.
Okay.
What are your thoughts on plug power and fuse cell at the moment?
think plug keeps coming down to $36 area.
And what about fuel cell energy?
This might come down to $10 or so.
Okay, thank you.
You're welcome. This is paying a pretty good premium for those of you that have low accounts, small accounts, but want to do CSPs. $1,300 will get you 140, 10%, a little bit more than 10% of your leveraged value. So this is a $13. That's a pretty good position to get into for CSPs. Okay. Who else has questions?
Looks like it's gonna be an early night for you.
Yeah. I got up really early today too, so I'm honestly dragging right now.
Good thing, I guess. Then
Yeah, maybe.
I missed last week's, but I rewatched the video. That was like 4.5 hours.
Yeah, sometimes it's a marathon. Sometimes I don't know. I might end it pretty early tonight. Like I said, I mean, I woke up at 8 o'clock this morning. I don't normally wake up until about 10:30, and I normally get a nap in the middle of the day. And I didn't get one today, so Peter, what's up?
Hey guys, yeah, I just got two quick questions. So I did a bull put spread on Square, and my short is for $200, and it expires on next week. So right now I'm okay, but if it does drop below 200 next week, it's obviously not cash secured. Would my long leg below that get exercised to cover that short? Or how does that work?
So the short can be exercised, and then you'd be negative 100 shares, and then the long leg will exit out or cancel it out. So if either one of them gets signed or exercised, the other side's going to cancel it out.
Okay, so that's why I see a flat line on the max loss. It's the difference between those two strikes, pretty much.
Yeah, I mean, if it goes really against you, the max loss could be greater. But if it stays within that relative area, then max loss is what it shows.
Okay, yeah, I mean, the strike spread is like $15, so it shouldn't be that bad, I hope. And then the other question that I have is, I'm approved for level 3 on E-Trade for options. So level 4 gives you naked calls. But if I'm doing covered calls on certain stocks and say, the stock starts dumping and I'm up on it and I'm comfortable with taking a profit on it, will they allow me to do that, or do I have to close out the covered call first before I sell the stock?
That's a good question. Because if you sell the shares and you leave the call open, then it's naked.
Yeah.
I would assume that they're going to require you to sell that short position first. I mean, personally, I would recommend selling the short call first anyways, because you don't want to be in the position where you're naked.
Okay. Just in case it jumps back up or
Yeah,
something.
just in case it quickly goes against you. You want to get out of that short position first.
All right, cool. All right, thank you.
You're welcome. All right, who else? Let me use the restroom real quick, y'all. Give me like 2 minutes. All right, I'm back. I think somebody was gonna ask a question right before I walked away. Lito.
I got a question.
Okay.
Yeah. So I'm in like some put contracts. What am I in? I'm in CCIV and RKT for them to go down. But my question is, does theta benefit me with puts?
Did you buy those puts?
I did buy the put.
And they don't benefit you.
Oh, really? They're gonna, okay.
Theta only benefits option sellers.
Option sellers?
Yes.
Gotcha. All right. Thanks.
You're welcome. Okay. I think Lito, did you have a question?
Yeah, I was gonna ask you, what do you think about this market correction?
I
Because
think
I'm seeing a
it's
lot of
expected.
news.
Very much expected.
Do you think we're gonna have a crash or no? Because this is my
Nah.
first season in this market correction. Because I started trading in late 2020, and this is my first time in the market correction.
It's not going to keep dropping. Long-term stocks are bullish. If you look at this right here, this orange and pink, this is.
For some reason I can't see your screen.
Oh, right. I guess it would help if I shared. So if you look at this orange and pink, these are generalized time frames of market sentiment. Right. February, bullish to neutral, which means it's headed in the direction of bearishness. Right. By March, it will be bearish. By May, it will be going back towards neutral. By June through July, it's bullish and then ends up being neutral by August, October, and becomes bearish until about October, November. So it's relative. This is historically how the market goes. I've had this up here for a long time. I mean, there's a couple of people in sports, especially, that recognize this whenever they see my screen. They're like, oh, what's that? So, this isn't something I just made. This is something that's been here for years. I tried to do with the white text, I tried to pinpoint the months specifically, but it doesn't work that way because it's only relative, right? So, last year, February was slightly bullish still. And then by early March, we had bearishness. But this time it happened, well, I guess maybe relatively around the same time, to be honest. But, relatively speaking, you can be very close to the time frame as to which the direction of the market. So hopefully that answers your question.
Okay, makes sense. Thank you.
You're welcome. Okay. Who else has questions? Probably going to let this go for 10 more minutes and then head out. So I'm happy to continue taking questions. If anybody has any.
Also, I got a question for you. I'm new to Thinkorswim.
I can barely hear you.
You hear me now?
Hold on. I can hear you, but very, very light. Let me see if I can adjust your. Nope. It's very, very light. I can barely hear you. It's like you're whispering almost. Maybe there's a way you can turn your mic up. So while that person gets their mic turned up, who else has questions? Oh, no worries, Mark. I didn't even know that you could do that. That's pretty cool. I'm not worried about anything. Nothing worries me. If you let things worry you, then you're worrying about things that you have no control over.
Hey, Hostel, could you hear me now?
Oof. Is it just me?
Still low?
Maybe it's me. Try now.
Better?
Not really, but I turned up mine, so go ahead.
I'll try to speak up a little louder. I started watching that YouTube video of options you posted up fairly recently. In the Money Kid. And is there anything that's like that detailed in terms of charting, just to understand it better?
Which video are you talking about? Referencing?
It's in the Discord. Let me find it real. It's just options explained.
My video?
No, it's how to trade options on Webull, but then it goes like 2 hours long. In the Money Kid. Anything like.
What are you trying to learn?
I'm just just trying to really understand, because I'm on Thinkorswim and I'm playing, looking at all these different strategies of, and I'm just trying to understand it, just a better understanding, more of a tutorial, what would you recommend?
Tutorial on what? Thinkorswim?
Yeah, because I got onto Thinkorswim last night, just I've been on it for about a week, and I'm just like dumbfounded when it comes to trying to chart or trying to pull up resistance lines and.
Well, you got to draw all that stuff out. It's not gonna. There's no indicators that go, oh, here's resistance and support. You got to draw that stuff manually. What I would recommend you do is honestly just get on YouTube, and you're gonna have to search specific things. You're not going to be able to find a video that shows you everything you need to know, unfortunately. You're more than welcome to go call TD Ameritrade and ask them to walk you through their broker. If you got $5,000, they'll do it for free. So if you got $5,000 in the account, they'll do it for free. I think it's five, or maybe it's 2,000.
Okay.
That might be your best bet.
There's a lot of good videos on YouTube. I've watched a couple and really got the hang of TOS in just a couple weeks. I forget what they were. I can barely hear that guy either, so I'm not sure.
Yeah, I mean, that's how I learned, right? I researched on my own. I went and figured it out. I asked questions on the internet that I needed answers to. And over time, you build up confidence and understanding of the platform. I recommend you virtual trade so you can understand the platform better. But unfortunately, there's not a silver bullet for anything out there. So, okay.
YouTube's your best friend on that one.
YouTube is great for everything.
Oh, yeah.
All right. Who else has questions?
Do you do trading full time?
No. Well, I do, but it's not my full-time job. At some point in the future, it will be when I've got enough cash to cover my lifestyle. But right now, I have a full-time job.
Oh, okay. Is it like a nighttime job?
I work 4/10s, 1:30 p.m. to midnight.
Okay, yeah, because I have a day job and it's pretty hard for me to follow the alerts. So that's what I was asking.
Yeah, you need to figure out a better trading style. Instead of following alerts, you should figure out a better trading style. Um, instead of like paying attention to the alerts, you should concentrate more on how to trade without the alerts, right? So if you know how to do that without the alerts, then you don't need to be able to sit here and watch them. You also need to get into a style of trading that allows you to trade without, it allow you to go to your full-time job and still allow you to trade. There's ways to get around it. So if you're trying to trade something right now that doesn't allow you to work and trade, that's something you shouldn't be trading that style. You should do something else.
Okay, makes sense.
Shares. Shares.
By far the safest way to go. Okay. Who else?
Hi, I have one question.
Okay.
Before you enter into any stocks, right? Do you use the RSI and the MACD indicators, and like for the research wise?
Not really. So MACD I use differently than what it's intended. Or oops, I use MACD differently than what the intention is meant for the MACD. Let me see if I can find something. We'll see if it's better. Hold on, I'll show you an example.
Thank you.
See if I can find something first. Okay, here's a good one. So if you look at Amazon, you look at the MACD right here. You see how wide these two lines are?
Right.
The wider they get, the more chance of a reversal.
Okay.
So if you look right here, look how wide it is, and then it reverses. Look how wide it is here, and then it reverses. Look how wide it is down here, and then it reverses. Same thing, wide, reverse. So I don't like indicators because they're an after the fact thing. But if you can figure out how to learn to use the indicator so it becomes a before the fact trade type indicator, then it's valuable. And that's why I use MACD like this, because to me, when I see a gap like this, I'd say it's a good chance it's going to reverse.
Okay. Makes sense.
Let's see if I can find it. Here's another one. Blah, blah. Look how wide that is. Also, it makes a difference on how low it is under this purple line as well. Like if it's down here, like this was, you see how this one was down, way down, and then it jumped up, right? But it stayed down here. It stayed bearish, right? That's the thing you got to pay attention to as well. So if it's super far low,
right,
and then it crosses, so if it's super wide and super low down here, then for this to become a bullish thing, it's going to cross this purple line. But for a reversal to happen and still stay bearish, this needs to come back over but not cross the purple line. So there's ways that you can trade this particular type of indicator to work for you, and you just got to figure out how it works. You got to watch how it works. But it's not something you can say, oh, okay, it's wide, time to get in, right? And that's not how I use it. I look at my chart, I do my analysis, then I come down here and say, oh, it's wide. That's just one indicator, one thing that says, yes, this is probably a decent trade. I don't look at this solely by itself and say, oh, it's spread wide, I'm going to jump in it. That's not how this works.
Yeah, I hate to interrupt, but I don't think we were able to really see your screen on that whole explanation.
Oh, man. Damn it. This damn thing. I would say, I'll go over it again. You should have said something, Amon. You were like agreeing with me, like you could see. All right, redo. Can you see this right here?
Yes.
Okay, see how wide that MACD is from each other. People use the MACD when it does its crossover. So when this blue line crosses over, up or down, it basically means crossover down's bearish, crossover up's bullish. Territorial bullishness and bearishness is above or below this purple line. But I don't use MACD the way people use the crossover. The crossover is an after the fact. So if you look up here, so when I hover right on the crossover, it's already had dropped. It's already down, right? But when I look at when it's really wide like this one, then it does a rip. You see that? Right here?
Right.
Yeah, so when it's wide, that's when you want to use it and say, okay, it's super wide. And you go look in history and say, I've never really seen it that wide before. How did it react when it was that wide before? Well, let's see. Oh, it made a huge reversal. I'd say this right here is a huge reversal. I mean, it goes from 267 down to 237. I'd say that's a pretty decent sized reversal, right? And same thing right here when it jumped. It went from 253 to 280. Right? Again, almost $30 difference. So now here we are again at a super wide MACD, right? So if this MACD comes back down here, touches 215, or the stock price does that, MACD is going to be stupid wide. That's when I'd get in. Does that help?
Yep, definitely. Thank you.
All right,
You're
you're
the
welcome.
best. Thank you.
That makes this a before the fact indicator, not an after the fact. After the fact means you've already missed your chance. Before the fact means you might be able to time it.
Is that a custom script or just something you can add within the studies?
It's just a regular MACD, just a regular default script.
Okay.
Do you use RSI?
True momentum is RSI, but with trend. So I kind of do. It's got an oversold and overbought territory. Except true momentum shows trend difference and change. So that's kind of why I like that. But I mean, if you can see, true momentum is way at the bottom. MACD is super wide, and Baba is about to hit support right here at actually probably has 225 as support, 226. So it might come back down to that and then jump. But then again, it might breach this 215 level and come back down to like 195-ish area. So who knows, right? I mean, again, like I said, this isn't a silver bullet. You can't look at this and be like, oh, it's wide, I'm gonna trade, right? You got to have other things that line up with it. All right. Who else has questions? I'm happy to keep going if people have questions, but if I run out of questions, I'm probably going to end it. So,
Do you mind charting fuel cell?
what is it?
Fuel cell energy.
Oh, I did that already, but I'll do it again.
Thank you.
Oh, if I can type. I think this one continues to come down. I think that it will probably at least get to 1120, but support is at 1005 area. I think it continues downward. Look how wide that MACD is.
Yeah, that's what I was about to tell you. The MACD is wide.
Yeah, but look how much wider it was wider before, right? And then closed up. So it's probably going to get wider before it reverses.
So the wider the MACD gets, the bullish the stock
The more
gets.
the trend will likely change.
Okay. Thank you.
You're welcome.
So real quick, if you go back to the last stock you were on, what was that? Baba or
Yeah, Baba.
so you're saying like obviously if it's wide, that's not a reason to buy. There has to be other things. So here would the other thing be like coming down to the bottom of the trend line?
Well, the other thing here would be say
Or
true momentum lines
yeah,
up,
yeah, all those
then
things
it
combined.
hits support level,
Yeah, support. Sorry, that's what
volume
I meant.
changes, that kind of thing.
Yeah,
If you're looking at options, where's all the open interest at, right?
yeah.
Um,
So
let's
just
see.
compounding all those things, the more
Yeah,
the
yeah,
better.
yeah,
The
yeah.
more the
You want to
better.
basically compound as many things as you can, which makes this a more solidified trade.
Yeah, got it. But even then, the market does what it wants to do still.
Right. But again, if you get in at a support level and you got all these things in your favor, the probability is going to turn in your favor at some point in the near future.
Yeah.
And what you're after is to make the probabilities go in your favor. You want everything to work out so that the probability is on your side. And if you do that and you have multiple things on a checklist where they all have probabilities in your favor, you will be successful. Even in a down market, it will come back.
Makes sense.
Ulysses Correa Jr. asked, I use the RSI and MACD mostly before I get into trades on the 1 and 2 hour time frame. Does that same wideness apply to the reversal in your opinion? It does, but the further out in time you go, the stronger it becomes. So the shorter time frame, the weaker it is. Okay. Who else has questions?
I got a quick question about your standard deviation channel. Does that that works on every time frame, right?
Yes.
Okay. So it like readjusts. Yeah.
Yeah,
Cool.
watch. Straight now.
Okay.
And then one minute it's downward. It kind of actually helps you see trend in a way, right? Downward still.
Yeah.
So like 10-day, 30 minutes, downward trend. 30-day, 1 hour is downward. 61 hour is sideways. So 2-month time frame, this thing is neutral, right? And then I start going to 3 months. I'm sorry. That's 3 months. So this goes back to downward. 180 shows slightly up. 1 year shows upward.
Yeah.
Right. So I mean, I wouldn't use that as a trend analysis thing, but it does hold a little bit of water in my opinion. So like example, I went to the 30 here, or was it the 60?
I mean, it gives
Yeah.
you a good idea when you're just looking at it quickly.
Well, see here, the thing is, when I look at the 60 and the 30 and the 90, so look at the 30, it's down. 60 is slightly up sideways. 90 is down. Right. That's a false positive. The 60 is a false positive because the before and after time frames show downward, whereas the time frame in the middle shows slightly upward and sideways.
Yeah.
So it's a false positive, basically saying that, well, the 60 can't really be trusted. The only time you really can use this in a trend analysis type of way is that every time frame matches as far as which direction those lines go. Then I could say, yes, that is a trend.
Yeah, that makes sense.
Good questions. Everybody so far has asked great questions. Who has more?
I think there's some in the other chat.
I actually got another one if you don't mind me asking.
Sure, go for it.
So with like the marijuana legalization recently being occurred and being talked about, I know the market's obviously in a downtrend, but would for a long-term investment be like a good marijuana sector plant, specifically like Aurora cannabis or such?
Well, the thing that I really have a hard time being on board with marijuana is the fact that the federal government still finds it illegal and will prosecute for it. federal government still shuts down recreational weed shops till this day. So until that changes, I won't be bullish on marijuana stocks. Now, that's not to say that it won't be bullish, right? That's just what I need to see before I become bullish, right?
Well, yeah, it makes sense.
So right now it's all speculation, right? It's all we got a Democrat in office, and a lot of the people in there are talking about, in Congress that is that want to legalize marijuana. There's a lot of liberal states that are legalizing it, and the first step to the federal government legalizing it is to, number one, take it off of um, the
Schedule 4 narcotics.
yeah, the schedule. Yeah, I think
Or
I was
Schedule
gonna.
1 or something like that.
Yeah, I was gonna say Schedule C, but maybe that's something different.
It's
But there,
something weird like that.
yeah, there's a ranking where it basically equals that of heroin and cocaine.
Yep.
And until
Yeah, I think it's
that is,
ridiculous.
yeah, until that's removed, I wouldn't be bullish at all. At least that, if the federal government comes out and says we no longer find marijuana to be the same consequences as cocaine and heroin. Now it's just a misdemeanor to carry 2 ounces on you across the whole country. Then I'm interested, because that's when it's going to start pumping. That's when you see a lot of these. I mean, marijuana stuff's going to really blow up, and a lot of these states that are kind of on the fence right now, that's going to push them over. And all the states that are conservative, like Texas, for example, it's going to push them closer to having to legalize it, because the more and more people that grow up and become of age, the more and more of them want to smoke marijuana. So that's just my opinion, at least.
Appreciate it. Just wanted your intake on it.
You're welcome.
Virginia just put a plan in to legalize it next 2 years.
Yeah, I mean, like I said, you get Democrats in office, that's what they're going to do, right? A lot of them.
Personally, I think we're closer sooner than later, federally too. I don't know. That's just me though.
I'm kind of on the fence about that statement, because Biden is not a liberal. Biden is a moderate Democrat. He's an elitist. He's part of the system. He's part of the whole status quo. And status quo, they want to continue throwing people in jail. They want to continue keeping that whole private jail industry going, so their buddies can make money, right? But if you get a progressive or a socialist into office, guaranteed it's going to get legalized. You put a Republican or a conservative in office, it's going to get kicked. The can's going to get kicked down the road longer, because the conservatives and Republicans, they're more, um, how do I say it? A lot of conservatives are faith-based. So when you talk about faith and people that are very heavily based in faith, they're probably opposed to things like marijuana, right? So, yeah.
Yeah. I mean, that's all true too. I don't know. Like I said, that's just me. I mean, I don't think it's going to happen here in the next 4 years, but we're definitely moving closer to it, in my opinion. But yeah.
Well, definitely a lot of the states are going to legalize it, but
oh yeah, for sure. I mean, we're already over half of them. It's already legal in one way or another.
Right.
Medically or recreationally.
Right.
I mean, shit, Oregon, they legalized hardcore drugs. It's ridiculous.
I personally think that we should legalize hardcore drugs so that crime
I mean,
can stop.
it seems like they have a decent plan for it. So yeah, whatever.
So in Portugal, it's legal across the whole country to do any type of drug you want, but you have to go to a facility that is ran by the government, and they give you clean needles, clean ways to do the drugs. But in this scenario, if you're like a heroin user and you live in Portugal and you go to these little shelters where they provide clean needles and drugs, they actually wean you off, right? So they'll give it to you, but they'll give you a little bit less each time, so that each time it's less of a craving. So I fully support, and that's a liberal ideology, right?
Huh. I never knew that. That is a interesting concept.
Yeah, so I mean,
Well,
I
it's
I
not even a
fully
concept.
support
It's
stuff
just
like that because
yeah,
you can
that's
get
I've
people
never
off
heard that.
drugs, and you
Yeah.
can let them do it safely. So if they want to do the damn drug, let people do the freaking drug. If you know what I'm saying, you want to get high and do heroin, it's your business, right? If the government wants to step in, they should step in and say, all right, well, here's some clean needles for you, right? And we're going to do our best to get you off, right?
Yeah.
Because if you're a heroin user, your life's probably jacked, and you know, if the government's able to say, well, this time around, we're going to give you, I don't even know what kind of dosage goes into a needle, but I'm just going to do some random ass numbers, 10 grams. All right, here's 10 grams. This is what you've been shooting up. And then tomorrow when you come back to get more, I'm going to give you 9.5. Right. And then the next day after that, I'm going to give you 9. Or maybe they do 10 for the week. And then next week it's 9.5 and so on and so forth. But that's what they do in Portugal. They allow people to do the drugs, but then they come in and say, well, we're going to get them off of the drugs. So we're going to give them clean stuff. We're going to give them a safe place to do the drugs. And we're going to give them clean, pure drugs. And we're going to give them less every time. So that at some point, they don't show up and want to do it anymore.
I mean, that's smart.
Yeah. Now,
The
I
person's
don't
gonna
know
wake
how
up one
well
day
it's
and
doing.
be like, whoa.
Yeah, I don't know how well that's working though in Portugal, but
Logically, it sounds good.
yeah, logically it definitely does sound good, but how does it actually work in practice?
How long have they been doing it? Do you know?
I have no idea, but I saw a video, that particular video that I'm referencing, I saw probably 10 years ago. So,
Wow. So
yeah, they've been doing it for a while.
yeah,
Only country in the world.
yeah, that's interesting.
Like they had such a really huge epidemic problem. Like all the parks were taken up by drug users, and just all the places in the country where you're free to, or it's like a government owned place like parks, for example. They're all littered with drug users. So what they did was change that and say, all right, no more people are allowed to sleep here or do that or do this. If you want to do drugs, we got these facilities that you can come to. We'll give you a clean bed to sleep in, a clean shower to get cleaned up in, clean needles and clean drugs, right? And then after you finish, you can leave, do whatever you want, come back and do the exact same thing as many times as you want.
Yeah, interesting. They probably had a lot of repeat customers.
That's probably an understatement.
Yeah, so I was just gonna say.
All right. Anybody else got questions? Anybody else?
Sounds like it's time to call it.
Yeah, I think so.
Thanks for the chat, man.
Oh, no problem. Thanks for joining. Thanks for everybody joining. Guess we'll end it. And hope you guys keep all coming to every lecture we've got. There's so much information to learn from everybody that we have that gives lectures. And, um, I taught FaZe and Mario, so I'm confident in their ability to answer people's questions and, give these lectures that I put them in place to do. So hopefully you guys get a lot of information out of everyone that does it, including myself. So, yeah. So I got some chat questions here. Let's see. Where'd it go? I'm gonna stop sharing because for some reason every time I'm sharing. Okay. Yep. All right. Saint says he's interested in learning the bond market. Where should you start? I have no idea. I don't do bonds. So unfortunately, I don't really have an answer for you there. YouTube, Google, that would probably be the best place to start. Mark asked, do I think tech and utilities getting hit hard past 2 weeks is an overreaction. No, I don't think. Let's see. No, I don't think it's an overreaction. I think that again, the market is retracing some, and it's going to jump back up and create new highs. Let's see. Looks like who's this person? Mark, I would not cut anything unless you're in an option. If you're in shares, I wouldn't cut that. All right. Well, that's it for tonight. Hope everybody has a good night. Take care. See you later.